Joining us now to discuss his thoughts is George Cipolloni. He's a portfolio manager at Penn Mutual Asset Management. George, it's good to see you. And we were just talking last hour with Steve Sosnick, and he's not convinced yet that these pullbacks are buying opportunities, actually, versus maybe selling moments to get out of the market. So how are you thinking about things?
Well, first of all, great to be with you. And I think this market is showing lots of divergences now. And I think typically when you go into earnings season, usually you have companies that do well, companies that do poorly. But now we have a third bucket, and it's companies that can even give guidance or not give guidance. And so we saw Skechers today and we saw Carter's today with really bad guidance around tariffs and not being able to give it. And we saw that earlier this week with American Airlines, for example, and United Air giving dual guidance, which is really new for us today, right? Mm-hmm. So, I think so. For us, we love volatility. We love to take a chance, and from an opportunistic standpoint, there will be winners and there will be losers through this period. It's not all a net negative unless of course things go poorly with the whole tariff negotiations.
So you love it because presumably you've got a list of companies where you're seeing the valuation kind of almost putting blinders on about the economic environment. Can you tell us what some of those names might be that you'd be picking up here, or that you are?
Sure. I wish we could. We don't give specific names, but I will say there, again, if you look at the company commentary and if you look at certain companies as they reported, some companies, well, one that we don't own, for example, Hasbro on the stock side, their margins actually expanded in a period where everybody thought toy makers were going to get smashed, right, because of tariffs. And so, again, if you understand a company's strategy and if you can see and identify those margin opportunities, those margin expansion opportunities, you can still find some ways to win. Again, that's what we're looking for from a bottom-up basis. We have great leadership at Penn Mutual Asset Management, and they're constantly encouraging us not to hide in the recession fears, but to actually go out and be opportunistic, which I think is the right thing to do.
Did you hear our previous conversation, George? It's okay if you didn't. I'm just curious. I don't want to repeat it.
Absolutely, Brian. Yeah, it was excellent.
Well, I don't know about you, but Ira was a little more optimistic, right? And I know that's a lot of people are struggling. Jobs are hard to come by. Costs, by the way, costs have been up for years. Let's just be the burger that was 13 is now 18, and it might be going to 20. I don't know. You don't have to be as bullish or whatever as Ira may have been, but are you seeing right now, George, a major change in your business?
There's an old saying that we used to say with my old partners, and we used to say it's not necessarily that you have to be bullish or bearish, but you have to be absolutely realistic no matter what the period is. And I think we're trying to today. And I think one of the things that we're looking at, Brian, so we're down a path here that has some potential troubles associated with it. I mean, if you listen to an economist like Thomas Sowell, for example, he said everything can go fine as long as there are known rules for these tariffs, which we don't have right now. So I think as we get the negotiations going, as we get some wins going, I think that's the most optimistic and positive path. The negative path is if we don't get those knowns and we don't get those rules for the economy, then money starts to freeze. And you mentioned about, your house, for example, how you're buying early. Companies are doing that today. And we're going to see a pretty big surge in maybe some inventory levels that have increased to prepare for this. Well, the last phase of this, and again, I don't think we need to guess the exact outcome. I think we need to be aware of all the possible outcomes. One possible outcome is money freezing. And so we see that in the markets, right? We see that when the VIX spikes. We see that when the long end of the Treasury curve goes up. And we see that when credit spreads go higher. So those are our indications from a market level, what to watch out for. Underlying all of this, again, we're going to try to pick good companies that can withstand this period.